Welcome back. Let's talk stable coins now. Cryptocurrency seems to be getting the ears and eyes of a lot of people on the continent, and today we are also joining that conversation. And right here in the studio we have the Chief Executive Officer of Polytop Labs. He is Seun Lanlege right here. Good morning and welcome to the program.
Yeah, good morning. Thank you for having me. It's really great to be here.
Great to have you. So a lot of people are talking about stable coins now, and we hear that even in Nigeria, small businesses are embracing and adopting it. People say it's because of cross-border fees. Tell us more about that.
I mean, stablecoins are changing the narratives around remittances, cross-border payments, and even trade, right? There's lots of restrictions if you live in Nigeria on the kinds of cross-border payments that you can make, on the people you can trade with, the people you can receive payments from. And stablecoins are just fully permissionless rails to receive and trade with anyone, anywhere in the world. But of course, this comes with a set of own issues, right? There's pros and cons for everything. A big con of this is that, like, these stablecoins are mostly dollar-denominated stablecoins. So the accelerated adoption of these stablecoins has also accelerated dollarization of major economies.
Yeah, so you seem to be asking for it to be pegged to local currencies. I think I've had conversation about stablecoin pegged to the naira also.
Yes, of course. We would like to see more stablecoins that are pegged to local fiat currencies. And there are advantages for this, right? So first off, cost of remittances go down because these stablecoin rails don't charge, exorbitant, fees for payments. We see the likes of 8 to 15% in traditional remittance rails, whereas with stablecoins, you just pay your transaction fee on the blockchain and you can pay anyone, anywhere. At the same time,
and any amount, I believe.
And any amount, absolutely. And of course, you don't have anyone calling you, where did you get all this money from, and why are you making these payments? Of course, stablecoins also put the local fiat currencies on the blockchain where they can be accessed by the entire world. So rather than demand for dollar going up because people want to trade with Nigeria, actually demand for naira goes up because people want to trade with Nigeria. So we can shift the narrative and shift the currency that is in demand just by issuing these local stablecoins.
So if it has this advantage, how come we are not doing it?
I obviously can't speak to this. I think our regulatory...
Well, who's supposed to push this in practical, apart from the talk, which everybody can talk about?
No, for sure. I think we need to have regulatory policies come from the CBN because they regulate all of the banking infrastructure, and really no major company or major bank is going to do something without the approval of the CBN. So I think our CBN regulatory policies need to catch up, especially with the US already putting in place significant stablecoin legislation like the Genius Act, the Big Beautiful Bill as well, which seeks to actually tokenize their entire treasury debt. So in the future, when you use dollar stablecoins, you're actually going to be using the US Treasury's debt. And this, of course, can be a huge issue because this debt, they can, of course, create as much debt as they want, and we then bear the brunt of this debt by just using these dollar stablecoins. But of course, it can also be positive for us because then we get to issue our debt as stablecoins on the blockchain.
So we know that in recent times, there's been a lot of conversations as to recognizing, the virtual assets. The new ISA, Investment and Securities Act, that recognizes it. We're hearing the lawmakers are talking about it. The Securities and Exchange Commission, they've also been loud about it. And I think about 2 weeks ago, President Bola Tinubu asked the judges, to get acquainted with blockchain and cryptocurrency. Do you think that perhaps we're going on that? Because countries like Kenya and Ghana, they've come out to set up their own framework and all of that about the operations of cryptocurrency. So do you see Nigeria, are we on the right track, do you think?
I think the moves by the SEC is definitely a move in the right direction, creating the necessary framework and policies for asset issuers. And we're not just talking about stablecoin assets, but also real-world assets. We're talking about stocks, Nigerian stocks on the blockchain. Extending the reach for these equities to become available on a global market. Even real estate as well, and all sorts of financial instruments, right? So I think the move by the SEC is in the right direction, but I think, we need CBN to also come out in favor of blockchains, because the reality is central banks all over the world are rapidly adopting blockchain technology. Just this morning, actually, we saw the Japanese central bank come out with their own stablecoin on the Ethereum blockchain. So at the risk of being late to the party, I think it's a good idea to start looking into these technologies now.
Yeah, but you know, the issue of trust also comes in when you want to deal with something new, anything new.
For sure.
So when you talk about virtual assets, blockchain, and all of that. And then every day, or almost every day, we do hear news of, you know, there was a fraud carried out through blockchain, and also dealing with that trust issue would also be something.
So the reality is that the blockchains are the worst place to actually carry out any kind of fraud. I would say that, in fact, traditional banking, rails is the best place to carry out fraud, because on the blockchain, what you're doing is entirely public to the entire world. And we have companies like Chainalysis, which, you know, to me, are a blockchain forensics lab that is working with the FBI. In my opinion, they're like a department of the FBI that is constantly surveilling the blockchain and tracking transactions as they move between accounts and they move between, you know, exchanges and KYC'd institutions. So fraud is easily detectable on the blockchain. It's unfortunately why blockchains were created, is that so that finance can now be more transparent. And Chainalysis has been able to recover hundreds of millions of dollars in assets that were stolen and lost. Assets that were previously thought to have been lost forever, but through this forensics tracking on the blockchain, because it's open, they were able to actually recover these assets.
I guess the recovery is why people hear so much about fraud being carried out, you know, on the blockchain, because eventually it comes out and everybody, ooh, this amount of money has been, you know, fraudulently acquired.
I mean, you share the U.S. government seizing, you know, Bitcoin and assets on the blockchain every year,
yeah.
Right? Like, so this is because these assets are being moved around in the public, and it's very hard to hide in the public.
So what's your company's, Nigeria, so what's your own?
Of course.
What's your company's play? What's your role in all of this? Why are you talking about this?
So my company, we are called Polytop Labs, and we're a blockchain research and development lab. We're the developers of Hyperbridge, which is a cross-chain bridge which allows assets and data to flow between isolated blockchain networks. You see, we see bridges as fundamental infrastructure for stablecoins. To give you an example, the top stablecoins in the world, USDC, USDT, they are issued on multiple blockchain networks. They're issued on, you know, Ethereum, Polygon, BNB chain, what have you. But then people want to be able to move these stablecoins across different networks for trade and for payments. And so bridges are actually what facilitate this movement securely between these networks. And so we've developed Hyperbridge, which is a new standard for cross-chain bridging. It's the most secure bridge in the world, which is also why we've been able to raise $5.6 million from foreign investors for our technology, to develop and scale our technology. And we're now bringing this technology to local regulators and local issuers to leverage Hyperbridge to issue their stablecoins across multiple blockchain networks.
But this comes at a cost, I believe.
Actually, Hyperbridge is very cheap. It's very cheap to use and doesn't incur additional costs to issuers and to its users.
So how does this work? We hear some companies are now using stablecoins. So maybe you should paint a picture of how it really works. As someone wants to make a payment through stablecoin, then you do what? Where do you come in?
I think a very good user journey is, I want to send money back home. I'm living in the US, I'm living in Canada, what have you. I have US dollars in my bank. I could send my US dollars directly to a dumb account here and incur, of course, exorbitant remittance fees. Or I could send crypto and send the exact amount to the people back home, but now they're receiving dollars. This, of course, like I said, drives up dollarization. But what if there was already a Naira stablecoin on the blockchain where I can swap my dollars directly into Naira and I send those stablecoins back home? And because there's already this sort of synergy between stablecoin issuers and banks, the minute I receive those stablecoins on the blockchain, I can cash them out directly into my bank. And of course, wherever these stablecoins live, perhaps they live on a different blockchain, and the people back home are also residing on a different blockchain. Hyperbridge can be that link between these two blockchains to facilitate that transfer of value.
And I guess the most important message there would be the costs will be lower than if you were to send directly to, because
yeah, through traditional banking rails, the cost will be significantly lower.
But is this working now? Because we do not have stablecoin in local currency.
No, we don't. And this is why Chainalysis released a report last year showing that there's been over $600 billion in transaction volume that can be attributed to sub-Saharan Africa. And this is in stablecoins, in dollar-denominated stablecoins. So there's already huge demand. There's already huge traction for these stablecoins locally. But what we're trying to push for is actually to convert that volume and to convert that use case into local stablecoins.
All right. Well, I hope, individuals like yourself can push the narrative to have others have had this conversation, but obviously we haven't seen it yet, you know. And even though we had the in-era, we don't we don't hear so much about that. You don't want to say anything, so we don't get ourselves into trouble. But when you look at what's happening on the continent, we see Kenya, we see Ghana. We're not even mentioning the UAE. Those guys, they've gone much far. What do you see in the area of adopting or adapting the new ways of payment and transfer that should, be beneficial to the continent?
For sure. So, in a world where every nation has its own local fiat stablecoins, I think we can actually do away completely with dollarization and the need for dollars to trade, between borders. We can have people be able to go from one local stablecoin to another local stablecoin directly without the need for this intermediary in between, which would usually be the dollar in this case. And this, of course, drives up capital efficiency, right? Because you're not paying these conversion fees to do these currency hops. And as well, I think it also makes capital more mobile. I can take my capital and go anywhere in Africa and be able to invest in whatever financial instruments are available there. And I can also send money back home as easily as sending a text message. So capital efficiency definitely goes up in terms of low fees and instant settlements. So, because time is also money.
Yeah, time is money. But if you want to do it intra-Africa, we still have our different currencies. Don't we still need a common medium of exchange on the continent?
So that's the beautiful thing about blockchain, is that you can actually have these applications on the blockchain that can allow you to swap between currencies seamlessly. So you wouldn't need an intermediary currency to go from one currency to the other. You can actually swap directly into the local CD. You can swap directly into the rand. You can swap directly into the shilling, the Kenyan shilling. And this would not require an intermediary currency at all, right? Creating more capital efficiency for both businesses and individuals alike.
Yeah, sounds interesting. And I know you're looking for a future where we'll have that in practicals.
I think that would be the best possible outcome.
So you can drive it.
Of course, we're trying to push this forward, and we're very open to talk to local policymakers, the CBN, working with them to create the right regulatory framework for these stablecoins and provide infrastructure to these stablecoin issuers as well.
All right. Thank you so much. I hope they hear you and they come for you on that. Thank you so much, Seun Lanlege, Chief Executive Officer of Polytop Labs, for your time on the program.
Thank you for having me.